Good morning, everyone, and welcome to the European crossover webinar. And we've gone and seen the euro start to make a bit of a bounce here from off of these lows, and we've kind of rolled back over a little bit lower here. And let's move back in here. The chart in here. And look, just about the time the euro is going to go and make a little bit of a lift here, and we kind of roll back right in here. Just kind of holding our own here. Not like I said, thought that we may start to really see this euro start to really power. Excuse me. Off of these lows, we may see some continued follow through on that. One market that has not slowed down very much has been right here with the dollar peso, right here, which has not slowed very much at all. We look for some resistance to come in right there, 1982, and it's still holding up just above there. And for the cable, same thing. We've kind of eased back in here. We saw right before the webinar yesterday afternoon, we saw a good little run up off of a Brexit headline, and then saw the market going and pair back again. Let's move on here onto the cross rate. And the Aussie yen is continuing to slide back here. So the weakness in the Aussie, I guess, to a certain extent, has just been pervasive, even here with the euro versus the odd. But pull it back in here. It's been just a slide back. The news is a bit sparse this morning, so we're going to take a quick look at the news story. So the dollar pinned down after U.S. poor manufacturing data. Worries about a slowing U.S. economy and possibility of a further interest rate cut in the wake of weak U.S. manufacturing data kept the dollar pinned down on Wednesday as investors sought shelter elsewhere. The greenback steadied or fell against most major currencies after dropping from a two-year high overnight when data showed the U.S. manufacturing activity contracted at its fastest pace in more than a decade in September. The weak data was a very big miss, says Westpac currency strategist Sean Callow in Sydney, adding that the market went into a seemingly not ready for bad news. It's probably going to reverberate for a bit longer, he said, and then investors would shift to jobs data due on Friday to seek a broader read on the health of the world's biggest economy. The dollar eased slightly against the euro to 109.33 and gave ground to the Australian and New Zealand dollars. The pound sank 0.2% against the dollar to 22.80. It was headed back toward an almost 1 month low, plumbed overnight as traders are increasingly nervous about Britain crashing out of the European Union. Britain Prime Minister Boris Johnson will unveil his Brexit offer to the European Union on Wednesday and make clear that Britain intends to leave the EU on October the 31st, no matter what. The dollar also rose marginally against the yen to 108.84, but stayed against a basket of currencies. Dollar index at 99.16, while manufacturing shock echoed through other markets, dragging bond yields and Asian stock markets slower. The Institute for Supply Management said its index of U.S. factory activity fell to 47.8, the lowest readings at June of 2009. A figure below 50 signals domestic factory sectors contracting. The reading is bad omen for September. U.S. labor figures are due on Friday. BNY Mellon analyst said in a note, since moves are often correlated. This reinforces our view that while the Fed is still severally clinging to its views that the rates are currently appropriate, it will ultimately have to accept the pillars of support, the labor market and the consumer, are weakening, the bank said. The Australian, which hits its lowest in a decade on Tuesday after the RBA cut interest rates, bounced a little to 67.16, but few expecting a sustained rise after the statement accompanying the rate cut left room for further easing. There are sufficient global risks to rattle the odd, and sub 66 remains on the table, analyst in Mizuho said in a note. So with that, let's go on and go into the data. So bear with me. And as far as reports coming in today, you can see it's relatively quiet till we get into the U.S. session. We do have ADP is going to be at 8:15 Eastern, and that's going to be a big key. But the market's going to be, focusing on whether we see, a potential drop here in employment figures. ISM New York Index is also at 9:45 Eastern, and so once again, like I said, it's going to be a relatively quiet session, with the exception of that. But obviously, there'll be a big focus on ADP numbers. And let's see on here, they're looking at 195,000. Could possibly see a big dip there. So it's a euro made new lows, but managed to close above 920. Resistance is 966, and a close above 1020 would spur additional covering. Support comes in and still remains at 880. Well, we're kind of paired back. I would have thought that maybe we would have seen a little bit better follow through here. Excuse me, a little bit better follow through with the euro. So we're going to go on and keep this 880 right in here. I mean, 880 as far as the key number. We'd actually allowed this market to even pair back as low as 854. It'll be 880. And on the upside, it's going to be here at 950. Now let's take a look here with the cable. Cable dropped to nearly 22 even before rallying back 130 pips on Brexit news, a headline. The pair is comfortable just below 123. Resistance remained at 23.46 and support at 22.05, which is about just where they pull back to. But you can see what we're referencing here is that we saw that rally, but the market just comes kind of sitting there by its lonesome right here, just below this 123, and it hasn't moved back. And really, for the most part, really, it's other than this dip back in here, that's going to be the support here to hold. Is at 22.05, and the 23.46 seems like a wide area, but of course, like I said, there was a note here that Boris Johnson is going to go and be releasing some information. Also, let's go back to this. And you still keep this at 23.46. And going back, I just checking the news here, is going to unveil his final Brexit offer to the European Union on Wednesday and make clear that the Britain intends to leave the EU on October 31st. So, well, and on to the Aussie. The Aussie defended the 66.70, finishing just above 67. Resistance comes in at 67.40 as some value in short covering should provide a bit of a bid, but you know, I thought we'd offer to see at least a little bit more short covering. The 66.70, remember, was that area that we thought there would be almost like a secondary support here in the Aussie dollar. And initially that held, but you can see we're starting to slide back towards that area. And I would have thought that we would have probably seen a little bit better follow through. Until it's taken out, it hasn't. So we're going to go and keep this as a 66.70. Possibly if we get a weaker ADP, that may allow for the dollar to go on and start to ease back a bit itself. It may allow for this, but to tell you what, this is really a very poor showing here with the odd. On the upside, we kept it at the 67.60. And for now, we'll just go and stay with that 67.60. Let's go and move into the Kiwi. Get some water to keep my throat moist. Says Kiwi held support at this level of the 62.08. Resistance comes in at 63. As shorts may look to reload at higher levels over the next 10 days. Whereas at 62.08, remember we had said that if we get beyond that, we were looking for, I think it was 60.97, 60, actually 60.79. So until it's broken, it's not. And actually, the Kiwi's actually faring just a bit better, not much, than the odds. So 62.08 will still be support here for the Kiwi, and resistance will be here at 62.97. But we are really hanging on at the bottoms of both the Aussie and the Kiwi. Since dollar cat is pushing the downside, a break of 32 should see 31 come into play without delay. Resistance remains at the 32.88. And if you remember yesterday, we hit that. I think we were looking at 32.88 for the resistance, and the high was what, 32.90. But we are kind of pushing towards that low side, and so potentially we can break that 132 even. But it's going to be 32 even and 32.88 here. So no change for right now, although certainly we're edging towards that downside here on the dollar CAD. So you're seeing good little rebound here with the peso, and let me just go and jump into that quickly. Says the peso continues its stalwart bid, but resistance remains at 1982 with value bids at 1956, followed by 1947. So we've kept our 1982, but we're still pushing higher here. And as I mentioned, it kept its stalwart bid. So I mean, we've got to recognize where we're at right now. It's 1987 5 is for the next resistance levels. Now we're expecting a pause here at 1982, but it's still keeping up the bid here. If we push up a little bit higher right there, that comes in at 19 right there, 1987 5. Let's go on and give it that next level. Support in the meantime then. It's going to be 1972. And beyond that, 1967, but 1972. Okay, and here we go with the dollar yen. The dollar yen staged a daily reversal with its close taking out the 3 prior day closes. Support is 740 followed by 696. Resistance is 801. So you can see here the close that we saw here took out 1, 2, 3. I mean, you took out the 3 prior day closes. You can almost make the case right there, but this was quite the reversal right here that we saw here in the dollar yen. So in the very short haul, you're looking at 801 for resistance. And then on the lower side, I mean, immediate support would be the 740 here, but certainly this pair is capable of moving somewhat lower. And probably most are going to be looking for a move down to potentially 696, but 740 would be immediate support. So let's go and mark that off. Sorry about that. See a quick little pop up here, and the dollar CAD. Let's go move into the cash dollar index. So the cash dollar index was turned away on its further advance, but still closing above 99. Resistance is 99.40 with support at 98.70. So we're looking right here at 99.40 for the resistance. I'm going to stick with that right there, 99.40. And support's going to be at 98.70. And with that, let's go into the cross rates. And coming across a squawk about some reports about a new UK plan, although we are seeing the cable continue to until 2025 for a relationship with Europe. But the cable's at 22.63. Anyway, let's go on, move on here with the Kiwi yen, and that has fallen back further and continues to drip back here at the 67.15. And that's support, and we're just going to hold that until it breaks below that. But that is, we're right there, just hanging on. And well, this market looked like it's about ready to go and take off. And we noted on this on Friday at the time saying, whoa, it's above. Okay, it's above here, but it hasn't. If we can get a close above that, we're really turning things around. And we simply did. And since then, it's just been a continued slide backward. So it's 67.15. That's going to remain the same here. And then on the what do you call upside, hard to say much as far as an upside, but let's go on move into that. At this point, that support's now going to be good resistance. It's going to be 67.59. So we'll move in now to the euro yen. Well, with the strength with the yen, we've certainly seen the fortunes of many of these crosses going to change here. This might even be a bit generous, and we're actually going to move it down here, down to 17.18. 17.18, that's what I'm looking for. Actually, it's going to be moved to down here, 17.18. Excuse me. On the upside, $17.89. go into the euro odd. This is the one pair where the euros continue to move a little bit further on here, but we'll move it to this level. I'm actually kind of rather hesitant with the way the euro's been acting. If it does get an advance against the dollar today, it's probably going to be more so about the dollar weakening than actually the euro advancing in and of itself. I'm surprised that we didn't see a further follow through from yesterday. Really surprised, but resistance will be right there at 63.60. And support will be right there at 62.28. Let's move on to the Euro Kiwi. We're going to keep this resistance right here. $75.70. And the support, that's going to remain the same here also. $73.98. So no change on the Euro Kiwi. Let's go move into the Aussie yen. Obviously, with equities being so low, a good opportunity for this market to continue to move lower. It's going to be 71.65. Resistance is going to come in right there. 72.60. Now let's go over to the guppy. Even past at 38% at this point. It's going to be right there at 31.33. There we go, 31.33. And resistance will be 32.65. Did make this run up here to the 34 even here with the sterling odd. But I think at this point, let's see. As I mentioned, Boris Johnson's going to be unveiling things his last chance plan today. We'll actually put the resistance just below that, which is going to be right there at 83.70. With support coming in 82.38, 82.38. With that, let's go and take a look here with the S&Ps. We've already seen a pretty good pullback here in these SPOs. Let's go and take a look here with a fib. We're just past the 38%, and some additional support comes in right there at 29.13. Maybe you can make the case just a bit, really right there, that 29, and this on the cash, 29.12. And a very good cluster coming in there at 29.03. You can see right there, very good area where it was trying to bounce off of. So break lower, but really there's good, you can make the case even right in here, 29.20. So a quick dip under there We'll find support at the 29.20. We have gone and bounced off of this 29.33, 34. But a lot of good volume in this area. We've also seen, in light of that, we've also seen crude oil, although despite coming off of those lows yesterday, we've seen this market start to pare back. Obviously, with the weakness, excuse me, with the weakness in equities, makes my throat hurt. Let's keep it on this gold. Now, we had talked about this 2 days prior, is that we thought this was going to be a decent area, and we thought that that area was going to be what we call bounceable. Let's go and take a look at this. Bear with me. We just about made it to the 38% yesterday. I'm surprised that gold's still a bit weaker. We were looking for this area to be a bounceable area for Monday, and then yesterday we took a dip. But obviously, when equities came off, we saw that bounce. We saw a pretty good bounce back, and but I'm surprised we're not seeing a little bit further bounce back with the continued weakness we're seeing with equities. But the 1488, and we know that, as I mentioned, these futures trades at about $6 to $7 premium as compared to the spot. So just factor that in when you're looking at that. But we just about made it to 1488, the 35% back. We're just below that. I'm a bit surprised we're not kind of challenging above that, but some decent resistance comes in right here. 1490, almost 1491, throwing about a $7 premium for these futures, and you're looking about, 1498 almost, which would be pretty good, decent little resistance there with the gold market. But obviously, crude oil taking a dip in light of pulling back, despite it being so sold off. As we make another turn lower here with equities. And we'll get back onto the main currency page. And euro, as I mentioned, sliding back. Considering how oversold it is, I'm a bit surprised here, and we could see a real dent potentially in employment data coming out this Friday with today's ADP. So a big focus on be on that. And I would think with that, you probably see the euro maintain its bid, and it's not really holding up that well. But as I mentioned, our bias chart resistance for the dollar index is 99.40. We're basically right there. We're 99.39. We're seeing the dollar CAD come back, a decent little bounce off of those lows here. We know that 132, we've had that as our bias chart support now for the last couple of days. And the low we've seen right here was 32.06, and a bounce back in here. Dollar peso still continue to retain its bid. But that's what we have today. Good luck with the rest of the day, and thanks for joining us here on the European Crossover webinar.